Hey everybody, this is Andrea Jenson from The Cash Flow CFO, and you're listening to the Cash Flow CFO podcast, the show that explores the financial side of running a business for people who want to maximize profitability and scale with confidence. If you want to make smart financial decisions based on data and put more of your hard-earned profits into your pocket, this is the podcast for you. This episode of the Cash Flow CFO podcast is brought to you by the Cash Flow CFO. Did you know that on average, business owners have up to 84% of their personal net worth tied up in their business? Our virtual CPAs and CFOs, as well as accounting and bookkeeping experts, empower business owners just like you to make big leaps that help them maximize profitability and scale with confidence. Visit thecashflowcfo.com for more information, and thank you for listening.
Hey everyone, it's Andrea, and our guest for today is Neil Twa. Neil is the CEO and co-founder of Voltage Holdings, a company specializing in launching, consulting, selling, and acquiring brands with a focus on e-commerce channels, such as Amazon FBA and multi-channel. For over 17 years, Neil has been constructing businesses both online and offline after departing his senior IBM role. Since 2012, he's launched 5+ personal brands, generated tens of millions in revenues as 8-figure sellers, and assisted in the growth of thousands of others through consulting, coaching, and mentoring alongside his partner Reed and their Voltage team. Welcome to the show, Neil.
Hi, thank you for having me.
Yeah, thanks for being here. It's funny, coming from a service-based business, the whole online retail is like a different planet.
Right.
As far as
foreign land, I'll call it Mars.
Right. The different strategies, all the different, nuances of that.
Yeah.
So we'll definitely dive into that, but I'd love to get to know you a little bit more. So tell me, how did you, through the course of your career, how did you end up where you are today?
About 20 different pivots and some major failures and fail forwards along the way and fail ups and fail sideways and anything but fail out. I didn't end up ever going back and getting a job, thank God. So I kind of burned the boats on my way out the door, leaving IBM. Didn't burn the bridges, big difference, because that turned into business for me later on. But I pivoted between the management consulting world. I've been involved in consulting for companies from IBM. And prior to that, when I was working at Sprint, during the launch of the first mobile phone, which was awesome to watch. That's how old I am. It just feels like I'm a lot older than that. But yeah, well, that wasn't that long ago, actually. But I got to see a lot of technology and growth from the inside out. And I kind of found my niche more in the business and development and leadership roles, specifically in marketing and lead generation and advertising and brand building. It wasn't until 2012 that I got interested in the physical product world, where I was, intrigued by the concept of building a brand around a product as opposed to a service or a consultancy. And so in pure form, I still do consultancy. I obviously run the product and brands now, which I find to be fascinating. It's challenging. It fits my ADHD personality. And so I kind of just adapted and pivoted like entrepreneurs do until you kind of figure out exactly what it is you're the best at and then just focus on that. And got really good at brand building in the physical product world. And so for the last 11 plus years, that's what I focused on. It was been quite a ride, actually. I've been, around computers since I was 16. I just never figured out what to do with them. And as the internet came online and things got to be a little crazy for a while there, I don't think anybody truly knew what it is they were going to do. And kind of just went through that phase. True Gen X in nature, I guess.
Yeah, that's exciting. So what drew you to the products and kind of what was the lure of saying, I got the service base, but now I want to test it?
I got really good at the lead generation and stuff, specifically for mobile phones. So I was sending a lot of advertising on mobile phones prior to like web interfaces and stuff. We were uploading in spreadsheets and determining media buys and then doing the next media buy. It was a tedious process, but it was something I found kind of fun. My first 299 didn't actually have any profit. They weren't that successful. And the 300th campaign I launched actually took off. So I really started to understand how to build that audience conversation narrative. And it was digital CPI, cost per install, cost per acquisition, lead acquisition through mobile phones. And I was making other companies grow really fast. So I was still stuck in that mindset of, solopreneur, trading time for money. I wasn't really building assets beyond myself. I sort of thought I was, but really I was just making more money in a glass house. So I really thought, okay, how do I build the brand and own the entire product? How do I own the back end and build longevity, build an asset that makes it a saleable asset, if you will. And that's where it led me to physical products. When you take the digital component of the world of online e-commerce selling, and you take the second oldest profession of products, barter, trade, sale, product movement, and you combine them, you get kind of a cool effect from it. You get both the digital, and the virtual real estate, and you get the physical inventory, the taxation, the benefits, the write-offs, and the wonderful effect of people using the products and appreciating the products and creating something that people like, which is a lot of fun.
Mm-hmm. Mm-hmm. That's really interesting. So I'm sure we have lots of listeners that have product-based businesses. We have a lot of clients that have product-based businesses.
Awesome.
Online and things like that. So I've been able to watch, from the financial perspective to see the ebbs and flows. Like you said, there's been a lot of changes that you've been a witness to in how you're selling those products and services.
Correct.
And even just take out services, selling the products, right? Platforms have changed. The way you can market them, with all the privacy things. So tell us a little bit about kind of where are we now with what you're seeing in the market that is, what's the word I want to say? Like, where are we at with all of the changes that have come? Like even just 23 and 24, I think had such tremendous changes that you guys in that industry had to adjust to.
Well, I mean, 2020 in the first quarter saw 10 years of growth in a 3-month period. So the hyper growth aspect of that was something we hadn't experienced since the internet came online. And being in a physical product business and the shipping and logistics and freight movement, we saw things that we hadn't experienced prior to that at volume and quickly, very fast. Going from needing 1 container every 3 months to needing 7 containers because the volume went crazy. From container prices going from $4,800 a full container load to $25,000 a container. So we saw all of this hyper growth and situation occur that really pushed the boundaries of our skills and our operational aptitudes. Frankly, myself and my partner dealing with this. He's a consummate professional. Met him in 2020. He's the CFO and COO. He does the numbers and operations. That's where he's very good at tactical and detail and being in the weeds. I'm the other half of the brain. I'm the creative. I'm the free flowing. I'm the jump off the bridge and build the parachute on the way down. So together we make one brain. And don't know if we can do the whole thing without each other, quite honestly. And so we have that balance to see each other, and we're board of advisors, to balance each other out. And then had obviously our clients to support. And we saw that growth really tremendously in 21, 22, 23. It's tapered down a little bit as we kind of saw a dip go down, but now it's making a very big vertical climb very fast as we see, new administration, different hopes, changes coming into this year, whatever it means to you politically. It doesn't matter. At the end of the day, the economy is ramping up based on excitement of change. And with that happening in this first quarter, we see a lot of sales going fast. In this first quarter, we saw one of holiday record sales through end of 2024, which wasn't particularly expected, but definitely grateful for that because we weren't sure how that was going to pan out in the fourth quarter with everybody's concerns of economic and other means. But people were buying stuff like crazy, still are. Okay, average prices have gone up in the order values on Amazon per se. That channel specifically has about a $1,400 a year average order value. So for those of you in the physical product world, that should be pretty cool. If you have a $70 or $120 or $200 average order value, they have a $1,400 over 12 months. So we look to match that in our product and base. And so that's kind of changed now too, as to how we pivot which products and retail price points we go into. So we won't launch anything less than $50 to $500 in retail price point now. Profitability is important. We learned that, which is what helped us go through that really big transitional period. We had the storehouses and the chops to keep going when other businesses fell out. They were running too lean, too light on profit, and that became a victimized aspect of the market. With things like TikTok Shop and Temu coming online and taking a lot of those mid to small tier products, 20 or less in retail price point, we don't play there because that market's being swallowed up by Chinese competition. It's being experienced now. Whether TikTok stays or not, we'll see. Temu is now being forced to do more fair practices and minimum advertised pricing with Amazon, which is going to force them to change the way they do that because Amazon is the juggernaut. So like it or not, they have to play big, ball with the big guys. And that's going to be an impact too. So we're kind of waiting to see what the next month does as these things go into effect in positive or negative aspects, we'll see. But it is one of the only double-digit growth industries that has been there, and it was one of the largest growth industries for the last 5 years. And it is trending. E-commerce and physical products movements are one of the fastest growing things and most profitable things out there right now. Real estate, of course, is always good. So business and real estate, that's where the wealth in America is made. So pick your horse. As we say around here, you can't ride two horses with one ass, so you got to pick one.
There you go. Yeah, no, absolutely. And that's actually really fascinating. Some of the things that you just mentioned that stood out to me is looking at having a plan in place,
Yep.
because when things that are outside of your control change, your business is either going to sink or swim. And when supply chain, all of that came into play, the companies that number one had a good cushioning, had a reserve, had
Yep.
money to reinvest into other channels or ways to move product, they were able to capitalize on that.
Correct.
And then the ones that, are running so lean that there's just not enough of a buffer or a safety net, right? They maybe didn't have a line of credit in place to tap on, or they didn't have just whatever else they needed to get through that. It really, really affected them. And we saw a lot of businesses, go out of business from our standpoint too. So that's been really interesting.
Yeah, it's just, in this year, we're seeing the growth occur. And one of the shifts that I've seen for years, and I've spoken to a lot of people about this, and Amazon itself is doing this, even though it's been years, speaking to this fact. Amazon, for example, and many of the other platforms are pushing the private label branding and a lot less with the wholesale, retail, online arbitrage stuff. If you're in that nature, you've got to get out. We're talking to one of the largest wholesale distributors in China and Canada, right now, who is like, we want private label brands, help us build them as fast as we can, right? Because they are figuring out real quick the platforms don't want to play that game anymore. So they're kicking those sellers off. I think 200,000 last year, last estimates we heard, that just got shut down because Amazon doesn't want them on the platform, right? They're hurting the customer returns. They hit the experience. People are not getting the right products. And there's a super increase in Chinese sellers on that platform, which is making it very difficult for U.S. small-based businesses to really compete at the level that China can compete at the manufacturing. So you've got to brand your narrative your way out of it. You've got to create a profitability value statement in the mind of the customer, and you got to elevate yourself into product tiers that the Chinese just won't go into, right? They won't go into it because they can move manufacturing at volume and lower priced products, which most U.S. suppliers cannot do, and sellers cannot keep up with. So in that pace, you've got to launch products with higher profitability and reach what we call that tier 2, tier 3 avatar in the marketplaces. And then you open up brand to brand US based competition. And it's very different. We don't really mess with the Chinese sellers that much.
That's interesting. I didn't realize that there was different segments in, on those platforms, for example.
Well, it's just a customer avatar at the end of the day, right? Okay. A tier 1 customer avatar of who spends, between $20 to $35 or $40 per product will typically have the option of buying the $40 to $80 or the $100 to $200 version of it, but they'll opt for more review-based and price conscientious-based, whereas those who get it to the tier 2 are averaging around $69 or more in price point, so $50 to $100 or more. They're a little less about the reviews. They're more about the solution-oriented version of the product or how it makes them look, how it makes them feel, or the safety features that are considered to be better for that product or whatever it is above the lower priced. And then, of course, as a lady, you would know there's $1,000 and $2,000 product purses, right? They hold the same stuff the $100 purse does, but they don't come with the same value statement. So if we brand up, we follow into the same demographic as those products. Yeah.
Yeah. No, absolutely. And I think too, there's an attractiveness to saying, oh, I'm just going to sell on one of these platforms and not have to deal with all of the other stuff of having a brick and mortar retail place. But I think, and I'd love your opinion on this, you're giving up some of, you're on somebody else's platform. They're paying to get the eyeballs there. And so you have to play by their rules, right? Sure. And so what advice do you give to somebody who is selling or wants to sell on Amazon, for example? Some of the things like positioning your product or the pricing, like you're saying, things like that would help them to maybe not fall into some of the pitfalls that could be there.
Most aspiring entrepreneurs that want to start and are considering the possibility of building an e-commerce business and selling products and answering, what the heck do I sell questions, will find themselves easier in the startup part of the business if they leverage the brand authority, traffic, and existing systems of a place like Amazon that already has 150 million customers looking to buy something in 30 seconds or less. It solves the biggest problem that most new sellers have, which is getting eyeballs on their offer. It's getting somebody to buy their product. We have a saying around here, sales fixes everything. Okay. So at the end of the day, since we're selling a product, a narrative, and a brand, and we're delivering the actual product itself, okay, we're selling the listings, graphic, image, copy, and perception of value above the competitive market, but we're delivering the product as the transactional means in exchange of the median money that exchanged that product to them. And therefore, they're getting the benefit of the product. Should keep it from breaking, make it great, build a better mousetrap, but focus first on selling the product. And that's usually where most sales in the business, and people think profit's a 4-letter word. And so there's some conscientious guilt usually kicking in at the aspiring entrepreneurial level of, it was too much profit greedy, or if I want too many goals, it's greedy, or they start kicking in these negative, limiting, scarcity belief mindsets when they really need to get into build the product and sell the product. Okay. Mm-hmm. And get into making sales, and then determine sales and revenue and create profitability, because revenue is vanity, right? Cash flow is king, and profit is sanity. So at the end of the day, we have to remember the business runs and powers you and makes way for the business itself and provides a good service or support or product when you make profit. Okay. Yeah. But profit should not beget purpose and value. And I think a lot of people forget that aspect when they start businesses, because they're solely bent on the idea of how much money it can make and what kind of lifestyle and Lambo hopes and dreams it's going to make for them. And I would argue that you need to find purpose and value first. Purpose plus value equals profit. Profit is one byproduct of the relationship of any business, operation, partnership, or other deal, service or product or physical related, and makes that transaction actually occur for the benefit of both parties. Okay, not just an individual. And a lot of entrepreneurs go to market thinking very individually. Mm-hmm. What's in it for me? What am I going to get? And instead, they don't think about the magnanimous and relationship nature of a product or brand they're driving for the outcome of the customer, not themselves. Purpose plus value equals profits, right? And if they are profit-centric focused, they will fail. 99% of the time. When I see that occur over the years I've done this, people who do it will fail. If they find purpose and value in the business, the byproduct won't just be tangible profits of the business. It will be profit of relationship, business, customer support, interactions, other people, the market. It'll profit in many other ways. It's very important people get that equation right.
Yeah. And I love that. And of course, you're, preaching to the choir, because we run everything here is how do we make this business model fit the business owner's big picture vision, right? Because they're coming in with the passion, and they're coming in with a special skill set or service or product that they want to get out into more people's hands, right?
Correct.
So I think, like you mentioned, right, a lot of people are looking at the product as profit as a 4-letter word, and profit doesn't always mean that's money I'm putting in my pocket, right? That profit has to fulfill a lot of other functions in the business operation. So you're paying income taxes, you're reinvesting into growth or a new product line or a new marketing channel. You're, using that to service any debt that the business has. You're using that to, as part of your owner's compensation package, right? Not all of your comp is going to flow through payroll. Some of it will come, through dividends or distributions, depending on your entity
for profit
type.
Sharing, absolutely. Yeah.
Start scaling with confidence today. The Cashflow CFO is a full-service accounting and fractional CFO firm. So it goes without saying that our financial experts are phenomenal at number crunching. But more than that, they are expert communicators who will connect all those complicated financial dots in a way that just makes sense. We don't wait in the wings and check in every so often either. With our boutique approach, we position ourselves front and center, watching over every dollar that comes in and out of your business as if it was our own. So if your business is making money and you're ready to take it to the next level, but you're not sure you completely understand your numbers, and you're looking for that trusted guide to help you build a roadmap to reach your financial goals, it sounds like we would be a great fit. Visit thecashflowcfo.com and let's get started empowering you to build and scale your business the way you want to today.
You got to think about it in less than 3 to 5 minutes or 3 to 5 months. You need to be on the 3 to 5 year window with any business startup. If you're in the entrepreneurial space already, you need to be saying, next 3 to 5 years, where could I be? If I'm doing something now that no one else is willing to do, then I'm going to get where no one else is at after that. And most are people a little more desperate in the idea of starting a business or cash flow strapped. So there's really 4 things we focus on: the time, energy, attention, and money aspects of building these businesses correctly, because they are assets. Mm-hmm. It is like building a house, and you wouldn't go out and just skimp on the cheapest lumber for your house and expect it to live for 40 years, right? And you may buy a smaller house to start off with, but you'll buy the better quality version that fits within your budget, knowing that if it appreciates, which it should, it becomes an asset that's a saleable and transactionable asset. Businesses are the same way. So build them from the beginning with the end in mind. Very important. Build it as an LLC, structure the accounting and formation and taxation, play, for the bookkeeping and things that are necessary to do the business right. Okay. And then be willing to risk the time and capital that others are not, to give it the opportunity for success. Because if you limit it by capital or time, you are limiting the opportunity for the business. If you're running the business, okay, and it's not meeting certain scales of growth, it's not plateauing above certain growth over year by year growth, or making that growth margin something that is changing the aspect of the business and moving forward, it's typically because of the owner who's not risking the next level of business opportunity. It's not the business itself, it's the owner that's holding it back. Maybe they're taking all the profits because they're living off of it. Maybe they can't get a line of credit. Maybe they don't want to because they feel it's too risky. They will typically be the ones holding the business back. And I've experienced this over and over and over again. Those who are the most successful are the ones that are willing to take the next level of risk, high reward, right?
Yeah. Yeah. Risk tolerance is a very key part of growing a business, right? And you have to make some tough decisions as a business owner. Sometimes you have to put your house up as collateral to get to that next level. Sometimes you have to, but these are all calculated risks that you look at. You're building out the forecast model. Yeah. You're not just going out day 2 of your business and taking a $500K line of credit.
Everybody would love to have a $10 million year business, but no one loves spending $1.5 million on inventory every 90 days.
Yeah.
Oh, yeah. So you have to look at the capacity of your willingness to do certain businesses. Just what I've asked people to do is not look at the business building exercise as some sort of side hustle or hobby business. While you might do it after hours or weekends or whenever in the process of building the foundation to get yourself out of a job like I did, then you would look at it from a different perspective: more abundance, less scarcity. I'm not just in it so I can make an extra $3,000 a month. Now I'm limiting the scope at which I'm willing to do things, put capital in, or the time I'm willing to put it in. When the opportunity between $3,000 a month and $30,000 a month isn't that much difference. In the end of the day, it's not. It is just a matter of finding what's working and deploying the right amount of time and capital to those things to go from 3 to 30 to 90 to 190 a month or more. It literally just gets down to following what's working, repeating that process, and then not getting stuck in your own mind as to limiting what's possible. And a lot of times people do that out of flat out fear of success. Mm-hmm.
Yeah.
They do. Yeah. They're afraid of the success because of the risk that's required.
Yeah. And that's really, I think, an important thing to point out, because as you're growing a business, you're hiring forward. If you have inventory, you've got to keep the inventory stocked. There's a lead time between ordering it, getting for it, you're paying for it. Depending on who your customer is, your AR might be, a 30-day terms. It might be, if you're working with a government contract,
90 days,
90 days, 120
that before. That's no fun.
Right? So looking at, I think businesses having a lot of the what if scenarios built out reduces that risk and lets them confidently keep taking that next step.
Following a path, following a coach, following a plan. Everybody wants to go straight to wisdom. Nobody wants to get experience through execution, right? Yeah. If you will execute, you will get experience. Out of that will come wisdom. You can't shortcut that, right? Unless you plan on being a 19-year-old life coach on the internet. Good luck with that. So the end of it is really you have to take the execution. And the challenge here is to fail up and fail forward. I could fill this room with enough failures to show you what is possible out of the smaller amount of successes I've had that have turned into great opportunities by just being there long enough, having those successes, and a little bit of luck in business. But I could fill this room with the amount of failures I've had in that process.
Yeah, I think all business owners can say that too, because
I hope they could.
That's part of the process. We always joke that anytime we make a misstep, we go, that goes into our business school fund, because this is the only place you're going to learn it, right?
Experience.
Is doing
Chalk it up to experience.
Absolutely.
Yeah. I don't have any belt anymore because I cut so many notches and the belt fell apart. Literally.
Yeah. So tell me, what do you see as the next evolution of what you're seeing in the markets? And
so we're always into innovation mode. It's just always, what are we doing? We innovate products. We don't invent them. So we're always in the thought process of how we invent business and the software we're using and other technologies to support it. AI being a big component of that in the last 2 years. How do we utilize this to time compress, shorten speed to market, as well as product development, research, images, graphics, copy, everything to expedite and increase the value of it, even down to agents that we've created that are helping us do certain tasks and fulfill certain things we used to take to the market. For example, like a product research survey for a new product launch. We would take it to an actual group of survey people and say, hey, what do you think? Do you like these images? Do you like this graphics? Which color variants do you want? And they come back and give us the information. We compile it and then we take it to market. Well, we got an agent to do that now. And it's 99.9% accurate. So we ran a 5-product test against the market survey group. And we did the same thing with the agent we were testing with all of our information and data we fed it. And it was 99.9% accurate. So we just stopped taking it to the group. And we have now time compressed down product research R&D into the agents. So we're using that for product research. We're using it for copywriting and validation of keywords and AI-driven systems like Amazon's new Cosmo and stuff and Rufus to help determine how to get the algorithm primed correctly to understand, read, and coherently tell the ranking algorithm on Amazon what our product is about, because AI is doing that now. And if you don't understand how that's working, you're already behind the 8 ball. If you don't understand keywords are becoming irrelevant, you're already behind the 8 ball. So we use it at every facet of business and development. I take our seller board CSV files that we export for each product that shows profitability, et cetera, and I'll dump it into Claude, and then I just ask it questions, right? What about this? What about that? How about we forecast that? And I use it as a sounding board for the information we're using. And each of those have been, programmed and continue to be fed information. So they just get smarter and smarter. So AI has been a big component of change for us in making and moving products to market, analyzing companies in the startup phase as well as the buying phase. So we'll use that data to analyze companies that we're looking to buy, financials, information, product forecasting, competitive market research, and everything. We've been using that to help us shorten and time compress those purchasing decisions.
Yeah, no, that's tremendous. And I think that's something I definitely wanted to open up some conversation around is acquisitions, right? Growth through acquisitions. And I know you've been doing that with your business. So how has that strategy played out for you? And is it something that you'll continue to do as you move into the new year? And
are you familiar with the term Amazon aggregator?
Mm-hmm.
Okay. So we were on the cusp of that in 2019, and I raised about $100 million in capital by 2021 to go out and purchase about 50 companies as an aggregator. So Voltage Portfolios was in the market. We were getting ready to go buy. Data forecasting and analysis by about November 2021 told us the market had shifted so significantly that we had to pause all of that effort. Before we took the capital, we realized that people were buying at 40% above market. It was unsustainable in certain operational controls to compete in the market at that level. And so we just paused it all. Some people were happy. Some people were kind of frustrated. Well, turns out that was a right move. If you've looked at the market lately, it's imploded. There's questions about people taking SEC investment funds and all kinds of nonsense going on as the market is kind of dumped, and they're actually trying to offload many of those brands into the market, some of which we're looking at for purchase. Great brands within bad operations, as it turns out. So we have gone and refocused. That was a learning lesson on how to approach the market. We partnered with a company called Patriot Growth Capital, which is a veteran-backed, veteran-funded private equity group. We are going to be the operations and control management of the operations, and then overseeing the acquisitions of those businesses and taking control of them. And so as part of that process, we're supporting the veteran community in that. And that's veteran-backed and owned, and it's very, very cool. So we're on a mission to get veterans into the businesses and even give them the opportunity to purchase those businesses back from us after 5 years. And so that's been a big front of this. So we've raised the necessary capital. We're very close to finalizing 3 deals right now. One that's actually coming up here after about 20 minutes. So we're going to be talking to them about the final deal points of that business. And those will be the first 3 acquisitions of 2025 under this new deal. It took about 2 years to get to this point. So super excited about that. Had to kiss a couple hundred frogs to find the ones that are in our buy box, whose due diligence got to the point where we're ready to make an offer. And that should move a little quicker. We've got some institutional capital and a few billionaires interested in what we're doing, and that should really change the course of where we're headed, which is a goal of getting about 50 businesses through acquisition by currently 2030, roughly.
Okay. Yeah, that's great. Yeah, that's exciting. And I love that you had the wherewithal and the patience to pull back and be like, yeah, this isn't the right.
Well, it was a tough decision. It was 18 months of my life
that
had to come and put a stop on. And I had to own that and say, okay, why are we not doing this? And like I said, some people were very happy, most of them. And a few people were pissed. And, we weren't going to do it. They were just mad. Like, it felt like we let them along, but I'm like, I'm not taking your money if this risk is too great. And it was. And as it turns out, we, made a collective decision, and it was a great one. I had to lead that decision, which wasn't fun, but being a leader isn't always fun.
That is very true.
But it was the right decision overall. The team helped make, and as we executed that, it turned out to be definitely the right move. As that has fallen apart. So,
and you just all that wisdom and insight you gained from that experience, right? Even though it didn't turn out the way you wanted it to.
Great connections, good business. Was done in the way that, that held up. My name and my business weren't dragged through the mud. And we didn't end up buying things that depreciated 40% in the next year, which is exactly what happened.
Yeah. That would have been a whole nother conversation, wouldn't it?
It hurt a lot of aggregators. I was asked to consult with a couple of aggregators during that time period under NDA. I can't disclose which ones they were, but I can tell you that they had mismanaged the funds and operations. And on one particular call with the 5 lead exec team, I told them to give the rest of their funds back. Needless to say, they didn't call me back after that.
Yeah.
And they went out of business, unfortunately.
Yeah. It's
blew through billions of dollars in capital on businesses they couldn't support.
Wow.
Very unfortunate.
Yeah, it is. But it's also just another example of you've got to know the whole market landscape, all of the things before you're deploying strategy.
Correct.
So for other businesses who are, and especially at that level. But for businesses that are either doing roll-up strategies or growth through acquisitions, it's important to really have the right team around you, number one, but also spend the time, slow down to speed up and spend the time to.
That's a good way of saying it. And I'm blessed to be the dumbest guy in the room amongst a very good, smart group of people that I get to sit back and watch them do their very amazing things. And we've got a great due diligence team, and the legal team is all set in place and doing what they need to do. And our operations team is poised to take control of these companies and move them to market. We're super excited about those. They're all physical product brands, been around for 5, 10, 20 years, very long-term sustainable. They just are missing some, market opportunity that we're going to help them unlock because we can. And that's one of the reasons why we're excited to partner with them and take this operation to the next level. So we'll see what next year looks like.
I feel like there's probably a lot of businesses out there that would be perfect acquisitions for you because you've got the tech and the modernization. And if they've taken their eye off the ball or their foot off the pedal just a little bit, it's changed so fast, right? That they're almost like, how do I even get back in to keep up?
If you try to attack Amazon today as a seller, and if you're thinking about doing it, heed my words, do not go to market with less than 25K in capitalization. And then probably in your mind, double that in year one for startup purposes. Okay. We won't start a brand new brand for less than a couple $100,000 in year one, just to tell you kind of where the market has changed. We started our first brand with $5,000, but that was 12 years ago. So at this point, market and research and risk is different for me. But when I have a new person come aboard and say, what do I need to spend to really take, year one to market? I said minimum 50 to 100K, and don't plan on taking profits out of year one. That's your build year. Okay. Mm-hmm. Year two is your growth year. For 12 to 24 months, if you've done a great job in year one, you should be in growth with profit. Okay. You should be dialing in your profitability through growth and channels and optimizations so that by years 3, 4, and 5, you could be in scale. Okay. Could it happen faster than that? Sure. It does happen faster than that usually, but realistically, at a base case in business justification, we want to see, a minimum of 150 profits 12 months after first revenue hits. And so we want to see certain numbers and metrics occur. And on that particular platform, if we launch there first, there is an algorithmic reason behind that. It is like a snowball. It's a ranking and organic information engine. And when you start to push products and inventory, there's a specific kind of thing it's wanting to see you do. It's wanting to see your trending and your product and your data set kind of go this way. And when you do that and push on it, it's going to respond at 10,000, 20,000, 50,000, 100,000 a month, very different to you. With other market, as you're leveling up that engine, it's going to push you along. It's like a wave coming into the ocean. Most people don't understand. It's a wave. You have to catch it. And that means you've got to capitalize on that wave so that, you could see, and we have seen, products that were doing 30,000 a month do 90,000 the next month, 180,000 a month after that, and 380,000 the month after that. Because when you push it fast enough and it's willing to say you're the better product, better data set, and you've got the market, it will go. You have to go with it, right? And it can be a fascinating engine to go for. And I have yet to break one of my top clients' run rate of 40 million in the first 12 months. Matt Harward, he's documented case study, 5 million a month in 9 months. It was an amazing push to show what the market is capable of doing.
Yeah. Wow. That's great.
Fun stuff.
Yeah. Well, this has been such a great conversation. Thank you so much for sharing your years of wisdom and experience. I'd love to share, if anybody listening would love to find out more about your consulting services or the different services you offer, how can they reach out to you?
Well, I believe we're giving away a free book, 10 free copies to your listeners with a code that'll be below this, I'm sure, video. If for the first 10 of you that go check that link out, it's voltagedm.com/free book, if I'm not mistaken. And there's a code for you guys to grab that. So that'll give you resources and information from our process, our 5x5 and product launch playbook. Voltagedm.com is where you can go check us out. Watch a 45-minute presentation of myself and my mentor, Kevin Harrington. And we call it the As Seen on TV business strategy for Amazon and off Amazon. And there's free trainings and virtual summits and other things we do to kind of help you understand more about the physical product world of building an e-commerce company. You're welcome to check that out.
Perfect. That's very generous of you. So thank you for that.
You're welcome.
And it's been great chatting with you. And I think, all of the listeners, there's so many nuggets in this conversation. We definitely covered a lot fast in a short amount of time. So go back, listen to it again, especially if this is the type of business you have. So much good stuff here. So thank you for sharing that. I really appreciate it.
Thank you for having me on. You've been a wonderful host.
Yeah, thank you.
Thank you for listening. Don't forget to like and review, and we'll catch you on the next episode. If you're looking for more content or resources in the meantime, check out our website for information, blogs, and our I've Got a Spreadsheet for That series. That's thecashflowcfo.com. Again, thecashflowcfo.com. We can't wait to hear from you.